Toronto home prices are falling, but rents are rising really, really fast right now. Stay tuned to find out exactly what's going on. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Properties TV. So glad you could join me here today. Now, I kind of talk about this topic almost every year with, some kind of different flair or spin on kind of what's happening in the market, but it happens almost all the time around this time, but it's just more exacerbated now because the resale market is slowing down. So as usual, here is my public service announcement to you that rents are about to rapidly increase. You know, like how properties for people were like flying off the shelves and there weren't enough of them in, early January and like February. Well, it's like this right now in the rental market, especially in the downtown core. Things are flying, yeah, I'm not even kidding, like multiple offers everywhere. So we essentially went from multiple offers on the resale side to multiple offers on the rental and the leases. And we kind of saw this in 2017 when the government announced the foreign buyer tax and the condo rents went way up because of the whole affordability thing or people didn't want to buy anymore. So we saw this in 2018 for the same reason. Interest rates, and we saw this in 2019 as well. It's seasonal, right? And we actually saw this in 2020 during the pandemic. It's just, not in the condo market, because everyone's fleeing the city and they're, going to larger properties of green space, which was the burbs. And of course, we saw this in 2021, but not as crazy. And we'll see it again this year. And as with all of this, there's a huge tailwind due to buyers sitting on the sideline and deciding to rent instead of buying because, they're afraid of what the market is going to look like in the next few months, right? So they'd rather rent and kind of wait it out and let the dust settle before they do something, all because of the rising interest rates. Now, a lot of people who want to buy still do, but want to see where the dust settles before they make a move. So that's why they move into the rental market. So let me show you some pretty charts and to illustrate this for you. So chart number one, you can see over here is that you can see that the active listings in Toronto is trending down right now. Meaning, and this is specifically for the market space. So you see those blue lines in 2017 and 2018. That's why the rental rights spiked like crazy. Now, we had a short burst in the condo space last year, kind of just before the school year started in September. So for a lot of the post-secondary, UT and Ryerson or Toronto Metropolitan, it's still Ryerson. Yeah, anyways. But it didn't quite absorb all the inventory that was built up from the pandemic during the condo space in 2020, right? And you can see that we're absorbing all of that right now, plus more. This is going to mean that we're going to have a supply shortage for rentals because there's just not enough and there's a lot of demand, right? Meaning prices will go up as there are already multiple offers. And we're already seeing this, like I was saying earlier. Now, this next chart over here talks about the months of rental inventory, right? So similar to months of inventory on the resale side, this is just for how much rental there is. And obviously, the lower the number, the less stuff there is for you to rent and the faster it is being rented. And you can see that the trend right now is slowing down in the green for 2020. And we're way under the lowest we've ever been in the last 10 years in regards to months of inventory for the rental space. So as you can imagine, the prices are going to go up because months of inventory is going down. Oh, yay, joy. And here's another proof that we're about to get squeezed in the rental market as well. Remember, this is all before the higher number of permanent residents and international students that we're letting in this year specifically, right? So if you look at this chart over here, you can kind of see here that we're letting basically the most people ever in the last 2 months, record breaking. So if they're not coming in with bags of cash or they really kind of care about, the market sentiment and they think prices are going to come down, they still need a home and they're probably looking to rent somewhere. And here's another point for me to drive home, which is over here. And you can see that the lease-to-list ratio is at the highest ever. Meaning that more of the properties coming onto the market for lease right now are being snatched up and absorbed, like I was saying earlier, in multiple offers. And all the signs pointing to the rental rate increasing. See what I mean? We are primed to skyrocket. Now, if this is the type of real estate content you enjoy, make sure to help us spread the knowledge by smashing the like button and subscribing to the Prime Properties channel, because every single week we put out awesome content like this for you to give you an idea of what's happening in the market. And now that we're heading into the summertime, we're going to see that seasonal summer boost on top of the buyers who aren't, buying and sitting on the sideline. So that's why we're driving the rental rates going up. And this is kind of where you got to balance between rental rates versus interest rates and whether you're a good investor or not, right? But I kind of talked about that in a different video about why the condo market's softening right now. You can check it out here. But we put all this information out there for you to give you an idea of what's going on so that whenever you're thinking of buying, selling, or investing, you'll think of us like, Zen and his team, they're really good at putting out that information, and you'll want to book a strategy call with me. And you can do so by using the link right here. It's www.chatwithzen.com. Now, I've compiled some like MLS rental data for you in the past decade or so to give you an idea of kind of how rental rates, fared in times of declines in like the resale market and uncertainty in the market, which is kind of right now, right? So what you see on my screen over here, or maybe I'll shrink myself because I know it's a really big chart, is the quarterly rental data from TREB for Toronto only. They don't have the suburbs data, and so it does not have it there, but this is Toronto specifically. And it's broken down into the bedroom type, but we'll basically just look at the average in this example to illustrate a couple points, right? So I've highlighted the events to give you an idea of how the rental market responded, and these events correlate to certain years, right? So the first one is last year in 2021 when the city started to open up again, and there was like a huge rush of international students that were coming back from overseas because some of them had to leave because of the pandemic, right? And the schools are starting to do in-person classes again, so they needed a place to kind of live when they came back. And we saw a huge bounce of 9.7%, bringing us back to the pre-pandemic rental rates, which is wild because we lost like a lot for rental rates during the pandemic. And you can see that the absorption rate, which is the same thing as like sales to new listing ratio, was at 82%, which obviously is really high. Now, the next one, obviously, is the biggest decline, the pandemic. It's the biggest decline we've ever had in history in this data. And that dates back to from March 2020 up until like almost next year, where we saw rents drop almost 20% in the span of a year. And it was a really rough time for like Toronto property owners, specifically in the condos, but it was incredibly good for the suburbs at the same time, again, which isn't in this data. This is why I would say this subset of data in that year in these quarters are kind of an anomaly, because everyone's just like, peace out, Toronto, I'm out, I need more space. Then we got the market conditions like we are currently on right now, but this is a 2017 where nobody really wanted to buy anything after the foreign buyer tax. So you can see that rents basically went up 10% right after. Again, a lot of people freaking out on the resale market, so they stood on the sideline. And you can see that the absorption rate was 83 and 87 respectively in the middle of the two quarters, flanking to 2017 in the summer, right? Then obviously you have the 2008 great financial crisis. Honestly, when I looked at this data, I have no idea what's going on over here. It's on and off a lot. There's no way the data would have fluctuated as much. So I'm kind of penciling this in as to maybe the archive data is a little bit off from TREB. And when I did look at the reports, instead of doing it every quarter, which is every 3 months, they started doing it every 4 months or so. So that's why I think this data is a little bit off. But ultimately, I wouldn't kind of draw any conclusions with the great financial crisis data. But what I can say is that the net effect from the start of the great financial crisis, essentially, when the recession started to the end of the recession, we saw the rental rate drop about 9.6%. But you have to remember, like the 2008 great financial crisis was kind of a small blip in the Toronto real estate market. Like we don't really affected it as much as the US saw, right? So at the end of the day, what can you conclude from all this data I'm just giving you? It's a little bit ambiguous and not 100% definitive. But if you ask me, in times like where we are right now, or like some kind of recession, rental rates do still drop. We saw that for sure, especially in the pandemic, right? And as well as the tenants trying to kind of, argue and get lower rents because they had the leverage to do so because there's a lot of stuff out there, right? And granted, this was very situational because the burbs saw a boom because, pandemic's a weird one. I don't think anyone in their lifetime has ever lived through another pandemic. But in a market where we are kind of right now, where the resale slowing down, similar to 2017, and currently due to like whether rates are going up or government intervention like the foreign buyer tax that came in, the following quarters, we saw a rental market surge, which ties into all the charts I showed you at the start of the video, right? So there's some correlations there. And of course, take this data with a grain of salt, because I know if I apply the population data surge that we saw in like mid 2010s, like 2015, onto this, it may explain some of the booming rental market we got from like 2016 onwards, essentially until the pandemic as well, right? Because, So my point is, there's a lot of factors at play. And as you can see, there is a strong-ish thesis that the current market conditions that we're in currently are very similar to 2017, and it's very likely we're gonna have a huge rental price spike because, again, it's very seasonal in the summer. It's just we had a couple more kind of driving factors that may see a bigger push. So I wouldn't be surprised if we saw another like 5 to 8% increase in rent by the time September rolls around when the quarterly data comes out. And it's kind of a good time to be a landlord if you have existing properties, especially if you kind of locked in your rates, at the 1.5 or 2% for the next 4.5 years or so. Now, if you're getting started, you kind of got to balance the kind of rate hikes with the rental rate hikes, because it's kind of like a fine balance. You don't want to lose sight of, the how high interest rates could become in the next like 2 months or so, despite how high rental rates could be in the next 2 months or so, right? Anyways, I hope this was helpful for you. And if you're looking for some real estate help, whether you're buying, selling, or investing, you can book a strategy call with me using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya.
Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.